Hello everyone, Michael here from StoreHouse Analytics. Welcome to the StoreHouse. It's the 22nd of April 2016 and I'm here to do a quick video, just a quick recap of some of the trades that I'm in, some trades that we took this week, and review those with you. I'm hoping to do another video this weekend, sort of a back to basics weekend. So please look out for that. Let's get into it. So as always, we start with the risk disclaimer. Here it is. Please pause the video and read it. Remember, trading is risky. Don't trade with money you can't afford to lose. And also, before we move on, I'd like to thank everyone who's subscribed to the channel, who's shared it, and the videos with their friends. The goal is to build the channel, so thank you for your support. Thank you for the words of encouragement and watching the videos and liking them and sharing them. Please keep the comments coming. We're looking always to improve them and the quality and the content. So please put your comments in there, send me an email, however you get in touch, it's fine. So thank you to everyone again. Okay. Risk disclaimer done. Let's get into the charts. So I'm going to blaze through this a bit quickly because I don't want the video to be too long and have you guys snoozing on me or anything. So let's start with the euro. This is a more recent trade that we've been in. We're still in this one. We've removed a little bit, but we're still in majority of the position. And I just wanted to go through the quick analysis of it with you. So here we're looking, as always, at the monthly chart. To start with, I've drawn my trend line. Just for those who might be wondering, why is the trend line drawn like that? Remember, let's go through our usual exercise of using the polyline. So here we start with, from the top, we have a drop, we have a consolidation, we have a bigger drop, we have another consolidation, a bigger drop, another consolidation, and another drop. So what we had was this trend line, a more aggressive trend line, no doubt. But this was the trend line which obviously was broken by that candle right there. Okay, so the question then was, do we have a clear base in here that we could trade? I'm just going to take this off so it doesn't obscure our view. Do we have a clear base in here that we can say was what was responsible for the break of the trend line? Question one. Question two, where's the rally from this area? Yes, it broke the trend line, but where's the rally from it? It's quite weak, isn't it? There's a little bit of a rally, it gets as high as here, but it's not had any follow through. Now you can see it's still holding price because we haven't been able to break below this, and we expect that because this is the area that broke the trend line. It's just not a very clear area. So we were watching that. But what we also noticed, I'm going to take this out as well, is using the polyline again. When price made this low right here, it went up and then it came back down here and then rose to this high right here. So that's why we've drawn this uptrend line. Whoops. That's why we've drawn this uptrend line. Now let me blow this up so we can see it a bit more. So I'll take these out. So that's why this trend line's been drawn, and you can see that it also was broken, leaving us again with a non-confirmed, because we didn't have a 2-to-1 break away from there, a non-confirmed zone where we could only take confirmation trades, no set and forgets, because we don't have the minimum imbalance from the fall here. So obviously the euro has been not going anywhere very fast for a good while now. So we were looking, do not get long in here. That's just it. look for opportunities to get short or exit your longs. That's what the decision matrix says. That's what we follow. So that was our premise for going into our daily chart and saying, right, we know where price is on the monthly. What are we doing on the daily? And we had this drawn in the minute this area was created with the fall away, because my trend line was already drawn in from a whiles back. You can see that trend line's been broken, leaving this area as an area of supply. And this is the area we've been feeding off of for the last couple of trades we've had on the euro. I'm looking for it to come further down here for the ultimate targets, but I'm already managing the position in accordance with my decision matrix. So what we did was go down. Remember where we are on the daily? We went down to the 4 hour, and I shared this trade, the first one anyway, on the Trading View chat room, trading institutional order flow with my friends over there. So here was a drop, consolidation, drop area of supply. This was my first short into that area. Profit targets hit, taken off some, trade over. And then Super Mario happened on Thursday, and it came into it. This was a scary thing to see for most people. But when you reference where you are on the daily chart, look at it. All Mario did was cause price to rise into an established supply area, go deeper into that stack of orders, and then fall. I call this trade in my plan, I call it the squeaky bum trade, where we go into a previously tested zone. Because we've tested, in fact, this one we had tested it a couple of times already. Here was the second test. But because we knew where we were on the daily chart, we still wanted to be in short around this area. It could have broken higher and gone to this. We were watching out for that as well. But the way we trade these previously tested areas is we waited for price to come in. And you have to be at your computer for this. Fortunately, I was at the time. And as price was going out, we took the short. And here we are now. So I'm still in this second trade and managing the position, as I said. So it's already, as you can see, it's already well into profit. I think we're looking at about a 3-to-1 already, if not more, over a 3-to-1. So that's good. So that's the euro trade. You see my thought process. You can hope you're following along. Moving swiftly on to the Aussie CAD. This is not really a pair that I often look at. For me, it doesn't do much for me somehow. But I looked at it this week because I never neglect any market really as much as I can. So again, I've marked these levels have been marked off for a good while. I've been looking at these two levels for a while, which is why I have not really been interested in until this week anyway. So we had this supply zone above and this demand zone created by the break of this trend line. Price has come into this zone once, and you can see the second penetration was much deeper. As we would expect, the stack of sell orders was decreased by this first penetration, so when price came back the second time, it was able to go in deeper to the next stack of sell orders within this area. And you can see the fall away has not been as big as this fall away after the first retest, which told us something. So here we have on the monthly chart our profit range right here. This is the profit range. It's still the supply and control. Depending on when you analyze this chart would determine whether you would be using this supply as your curve supply. As I said, I've had this zones in for a very long time. So until this breaks, I'm not going to be considering this. This hasn't broken yet. I have no reason to be looking at this, which is the next level up that we would consider if and when price breaks this one. So we have fresh demand below, not so fresh supply above, but not broken yet. So we were looking to say we're kind of high on the price range now, so we want to be looking, as the decision matrix says, to go short. So here we have it on the daily chart. Where's my trend line? There we go. So on the daily chart, we had this area, trend line broken, leaving behind supply. And if you really look at it, this is the origin of all the buying. This is this rally, consolidation rally there. So not only did this area contribute to the breaking of a trend line, it also took out this this demand zone, so supply. And then we had price rally into it. We were all over it like a rash. Okay, so that was the short. And a friend of mine in the chat room was saying, yo, StoreHouse, show us a live trade. So when this came up, I said, okay, here's a live trade for you. Boom. The prices were here when I told him that, look, here's a live trade for you. He's a great guy to chat with. He's all the way in Singapore. You know yourself. But here was a live trade that we took live in the chat room on the Aussie CAD. And if you were in it, we're out of it now, and it's over. So that was the second trade, it was a lot of fun because we did it live in the chat room. So that was cool. Okay, let's move on quickly. Just wanted to review again this US dollar Japanese yen that I posted on TradingView and talked about in the last video. As you can see, first targets already hit for this counter trend trade. It's all done. So that was a good trade, as we said in the review. Price into monthly demand. We don't want to be shorting into here. We want to be exiting any profits we had from shorts above, or and actually start looking for potential buying opportunities. So that's why we went down into the daily, and we found that we had the 3 consolidation patterns that broke the trend line. Here was price as of the Sunday open, and it gapped right down into our zone. I was asleep when this happened. I almost missed it because I always prefer to wait for the markets to open to set my orders in. But because I think my body clock was just alert that this was potentially an opportunity, I anticipated some gap down. I didn't know it was going to happen. Not psychic, not yet anyway. But I anticipated if there was a gap, I wanted to be ready for it. So when I woke up about an hour into the market open, it was still down there. So I just went in, and that was that, as I said in the last video. Okay, so let's move on. A friend of mine sent me an email again. Someone I've met for the last couple of months now, and he asked this question. He said, I don't know what to do in consolidation situations on the curve time frame. So he's a swing trader, meaning that his largest time frame is the weekly, not like me who uses the monthly. His is the weekly, so he uses the weekly, daily, sort of 4-hour or 1-hour combination. So he's been struggling with identifying trading opportunities when his larger time frame, as he says, is in consolidation. So I've looked at the CAD here. And just as an example, I started doing it, but I thought we'd do it together in the video here. So as always, we start with the biggest time frame, which in his case would be a weekly, starting with current price. Where is the nearest fresh supply zone above current price? It would be that one. You see, this has a really messy base. It's got a lot of candles in it, but because you're using this to define your price range, you don't care about the quality as much as you would on your entry time frame. You just want to look for where are the big moves. I mean, if this isn't a big move, then I don't know what is. This is a huge move in this pair. So this is the fresh supply zone above. And do we have any fresh demand below? No, that's not fresh because it's had 2 retests into it, because that's the whole zone. For those of you who will think it's fresh, it's not, because it's had 2 retests into it. I'm going to blow it up so we can see it. Okay, so you had the basing, and then the big rally, and it's come back once, it's come back twice, and then you had the big move. So that's not fresh. Anything else that's fresh down here? Nope. No, nothing fresh down here. Is there anything below? So you can see already that we've gone back quite a ways and there's nothing fresh. So we have fresh, I'm going to take this out. We have fresh supply above, and the nearest demand zone is not for a good ways below. So this is equilibrium that we're in. Okay, we're not close to the supply, we're not close to the demand, we're sort of in the middle. Okay, now just bear in mind also, we still have this supply zone that price has really struggled to get through. So we want to be careful not to say, right, that's our fresh, and ignore this one. We're still battling through this. Yes, we have an uptrending trend line using these two. We can't use this one yet because we haven't broken above this high. That's for you, living daylights. Remember that. That's one of the guys that I'm speaking to and mentoring. Great guy. So we can't use this because we haven't broken above that, but we can use this because this high is higher than this high. But we're still battling through this supply zone, so we have to be aware of this. We cannot anticipate too much or assume that this area will be taken out. We have to wait for that event to occur. Okay, so we're not in an area where we would want to be going long, because that would be anticipating too much. If I wanted to go long in this pair, I've sort of identified 2 areas which would line up. If we look, let me shrink this up. These 2 areas, the drop, consolidation, rally, consolidation, rally, these 2 areas, you see where they are. If you look on this monthly, you'll see where they are relative to the monthly. So they'll be much lower down than this yellow box, which is safer. It's a safer place. Alternatively, as I said, price could break above here, and then we would have opportunities to continue trading it up to this area. So that's how I would look at consolidations. You have to be very careful though, and follow price. Use the polyline, use whatever tool is on your platform to join those peaks and those troughs, and see where the trend lies and how it moves. Follow it. Don't just assume, because we could easily, if we didn't know what we were doing, we could easily say, right, that's a trend line, or maybe that one is a trend line. So we have to be really careful, because this isn't accurate. And always remember to look for the supply zones in control. So I hope that helps. I hope it does. Lastly, It's a bit longer than I wanted it to be. But again, bringing you all back to our old friend, the British pound, Japanese yen. Remember when we first talked about this chart was down here, right into this yellow box. I hope you guys remember that. Now, for anyone who is short, you've just seen a good chunk. This is a monthly chart, remember. You've just seen a good chunk of your profits taken out if you were shorting into this area. Remember we said this was the demand in control at the time. It's not an area we want to be shorting into. So that looks to be playing out. Interestingly, as we also talked about on this daily chart, look at what happened. Look at this. I've left the boxes in. Look at the zones now. Now we have an uptrend confirmed. We can draw an uptrend in trend line. We have one supply zone taken out. Price is now battling into this one. We've had a first reaction yesterday out of this area because we've now hit it. As you can see, we've now hit this area, which we said is likely to happen. But now we're probably, in fact, I'll leave this in here. But we're beginning to look for longs now. We're beginning to look for longs. They're not there yet. They haven't set up yet, but we're beginning to look. And we'll see what happens. As you can see, this is where I'm looking for price to come back to. If it does, it may not. If it does, then again, I'm all over it like a rash. So these two areas are where I'm looking at. These are too high for me to consider in my decision matrix, but these two areas are definitely good. So it's not totally set up yet. We'll see how we go. The weekly is still down. Okay, so that's it really for now. Look out for the weekend videos. I'm not sure when they'll come out, whether Saturday or Sunday, but look out for them. Sort of back to basics thing, looking at a few basics of supply and demand. Okay, I hope you find that useful. Remember, any questions that you have, please contact me. These are the ways that you can reach me: by email, leaving comments on the YouTube channel, and please remember to subscribe. Let your friends subscribe. I'm looking to see if I can grow it to, I don't know, to start with 100 and then 200 and build up the channel that way. Thank you for your support. Much appreciated. When you can, join us on the Trading Institutional Order Flow chat on tradingview.com, or look me up on Twitter. I'm always posting the videos up there as well, and some of the trading ideas are on the other social media sites. Twitter is the main one I use, and Facebook a bit as well. So those are the contact details. And to finish off, remember what the offer is saying, what the offer is at the moment, which is for a pay-as-you-go mentoring program for those of you smaller traders who are struggling with funds. Hit me up. Let's talk about how we can help you paying small amounts, relatively small amounts, when you can, for your mentoring sessions. I've got a couple of guys already lined up now, and there are 3 or 4 already also in the works who are going to be taking up those sessions with me, and it's easily done. So if you're interested, please contact me. Let's talk about your needs, your goals, and how we can do this. Again, those are the contact details. Thank you very much for listening. Thank you for your support, and I'll see you guys next time. All the best. Remember, they're protective stop losses. Use them.